So many traders have been struggling with price action in 2026, just blowing account after account to start the year. So in this video, I'm going to give you guys the entire full breakdown of the exact continuation model that I have been absolutely abusing in 2026 to rinse prop firms for payout after payout. This model has been presenting itself almost every single day within the markets in 2026. So I'm going to give it to you guys so you can stop blowing accounts and start rinsing these prop firms. Let's literally get straight onto the charts and let's break this down. So I pretty much want to start off with this. Pretty much the entire of 2026, we've started with market open almost every single day doing something like this, where the first few candles and first few minutes are an insane pump either to the upside or straight back to the downside. And this is when it gets hard to trade because so many people start to FOMO into the fact that it's pumping up and they want to catch a trade instantly up, or it's ruining their setup because it's just pumping and blowing through a bunch of levels and what they actually wanted to see for the day. And this is exactly where I've been able to actually capitalize with this continuation model, using this pump either up and down to our advantage every single day. To break the baseline down of this continuation model plays either two ways out of market open, and I'm going to show you guys examples of both. It either pumps straight up and we catch a continuation of that exact same trend, or it pumps up or down to fill a higher time frame PD array to get a continuation of the trend that we're going in. So it depends if there is a higher time frame gap or a higher time frame PD array that we are pumping into, or if we are just pumping to continue the trend and rip that way. And if we are looking for that higher time frame continuation, it is always usually a 15-minute gap or a 1-hour gap. And you can see right here on this trend, there is not a single 15-minute gap within here, and there's not an hour gap at all either. So this is telling me that on the lower time frame, our pump up, that is going to be the move we're making. We're going to look for a continuation to continue this move up, and we are not looking for it to push back down because there's no higher time frame gap resting over here for us to catch a continuation out of. So that brings me into, how do we catch the continuation when we're just pumping one way? What are we looking for? We're looking for either a 5-minute or a 15-minute gap. So we stay patient. You're going to have to wait at least 5 to 10 minutes into market open, and this is when you'll see it every single time. So you can clearly see that we made that pump up, and what did we leave behind? We left behind a 5-minute fair value gap, and this is exactly what we're looking for. This is where we can find our continuation to use this pump that we just had to our advantage, because we shot up so fast. And there's going to be so many orders left behind that need to get filled in this 5-minute fair value gap, and we're going to use that to our advantage. Instead of just FOMOing into this pump up, we are going to stay patient, wait, catch our continuation, and be able to catch the rest of the move. Now that we have the 5-minute fair value gap, it's simply just stay patient, let price play out until bang, until you see it pull back into the 5-minute fair value gap, because now this is our pullback, and now we can look to see our continuation to see if this trend wants to continue. And obviously, if we don't want to continue this trend, we're just going to absolutely push through this 5-minute gap and continue to the downside, and we're not going to take this continuation trend, obviously, because that just makes sense. So what are we really looking for? We're looking for an actual rejection out of this 5-minute fair value gap, showing that we filled orders and that we do want to continue to the upside and continue this trend. That's why it is called a continuation trade. So what am I looking for to see that rejection out? I'm looking for either an inverse fair value gap or a CISD. So if we were to continue to play this out, what can we see happen? We can see that we start pushing down deeper into this 5-minute fair value gap, which is even better for us, because if we were to mark out this range that we have here, what did we just do? We just pulled back into discount. We pulled back to equilibrium of this range. This is exactly where we want to see a rejection out of here and where we want to see our continuation play. So one, it's as simple as we just wait for our rejection out of here, but we need to know what we want to see. We're looking for either an inverse fair value gap or CISD. So you can see we have a very small 1-minute fair value gap right there. And we also have a level right here that would mark out a CISD. So we're looking for one of these two to get either inverse to the upside or for a change in the state of delivery to confirm that we want this continuation trade and that we want to continue to the upside. So this is exactly what we want to see. A pullback to our 5-minute fair value gap, an exact tap off of equilibrium. We are in the discount and we want to see a rejection out. We got the perfect V-shaped recovery with volume. These two candles are showing straight volume. You can see there's really no bottom wicks. It is just strictly buyers pushing through this. That's showing us that we want to continue this trend to the upside. Because if we did not, what would have happened? We would have just continued, push down, inverse this 5-minute fair value gap, and trended down and down and down on the day. So now this looks perfect. What did we get? We got our inverse fair value gap and our CISD both on the exact same candle closure right here. So now that just means we enter the trade. And when I'm entering off of CISDs, what do? I wait for it to pull back to the exact change in the state of delivery line, and that is where your limit order should be to get this entry. So right here, we pull straight back to the CISD level. Bang, we are in this trade. And where are we putting our stops? We are putting our stops right here. This is exactly how I manage my risk and where I'd put my stops. If you do not know where you need to put your stops on trades like this and on any single trade, I will put it in the link in the description, completely free risk management plan of exactly how I manage my risk and how you can use it to be able to manage your risk to pass fundeds and get these payouts with good risk management and not blowing accounts over and over again. So if you do want that, check the link in the description. You'll know exactly where to place your stop loss and where exactly I'm going to place my take profit and how much we should be risking. So for our TPs, where are we targeting? We are targeting a first take profit at this 15-minute high that is resting right here that was within London session, and then overall London session high over here. And you can see that gives us a what? We are targeting a 3.11 risk to rewards. This is a very, very good trade, and we can capitalize on a lot of profits if this does hit. But once again, we need to know how to manage our risk. So what do we also implement? We also implement a break even that is resting right here. That also is in the exact risk management plan to know where to put your break even, stop loss, TP, on and on to be able to pass these accounts. So now it's just as simple as we have everything set up. Now we just play this trade out, see how it ends up hitting, and you can see it absolutely smacks and hits our TP. And what happens? Perfect draw on liquidity. We start to reject back down off of that. So what did we do? Entered, got our perfect entry, continuation out of the 5-minute gap. We hit our break even right here. So as soon as we hit this level, our stops are going to break even, and this is a risk-free trade. It's exactly what we want. You can see played out, hit first take profit, and ran straight to second take profit. So this trade pretty much got done in the span of 10 minutes. This trade took 10 minutes to play out. And when did we take it? We took it 19 minutes into market open. So if you can simply stay patient for 19 minutes, and you will see these beautiful continuation trades play out. And that is exactly how you can catch this on a day-to-day basis. But like I said, there's two possibilities that happen when it comes to market open. The first one is we push in the trend that the market pumps to. But what is the second one? The second one is obviously the opposite way. So I'll show you an example of that right now. So with this example, what can we see? We're coming into market open and we're clearly in a heavy downtrend. And what is left behind over here? We simply have a ginormous 1-hour fair value gap that's resting right below this move we made London session and pre-market. And what else is within here? We have a 15-minute gap right here. There's also another little small 15-minute gap within this 1 hour. There's 3 15-minute fair value gaps resting within here, but our main confluence is this 1 hour gap. So how do we use this actual 1 hour gap to our advantage? You can see that we pulled back to it at the end of London session and pre-market, and we got a rejection out of it, but it didn't fully continue the trend, because what are we doing? We're starting to pump back up towards it coming into market open. So this 1 hour gap kind of turns into our condition for the day. Either we are going to tap into it and then re-continue this trend to the downside, or we're going to just absolutely blow through it and we're going to be bullish for the day. That brings me to, once again, market open. What have we been seeing? We have absolutely just pumped out of market open. So you can see right here, we pump out of market open, and what does it do? It starts to chop within here. So I see this chop, and what am I seeing? On the 5-minute time frame, it's not like the trade we just had. We pumped out of market open, but started chopping. We started chopping, and what did we not do? We didn't leave behind a 5-minute fair value gap to see the continuation all the way to the upside, because what did we do? We tapped into our higher time frame fair value gap here, which is telling us we're probably going to want to continue the trend back to the downside instead of just continuing the pump to the upside. We can also see here that our last entirety of this 15-minute trend we're in, it is pulled back perfectly to equilibrium, and we are now in a discount because we are looking short, and this is exactly what we want to see for that higher time frame continuation. So you can see that we're using this pump to the upside as a pullback for our continuation to the downside, because we clearly didn't show a clean pump to the upside that we wanted to just continue all the way up. Because if we did, we would have left behind again a 5-minute fair value gap like in the last one. Now it's just as simple as, what did we look for on the last one? We look for either an inverse fair value gap or a CISD. So we're filling this gap. We are remanipulating these highs, taking out all these highs. we're looking for this to push to the downside. Once again, if it does not push to the downside, what's it going to do on the day? It's just going to pump up and we're going to continue bullish. So then that shows our continuation trade just isn't there. So we need to see if it is going to reject out of this 1 hour and if we are going to see our actual continuation. We'll mark out what's our confluences. We have our 1 minute gap resting right here. That's what we want to see get inversed. And where's our CISD? Our CISD is not till all the way down here. So what will we clearly be looking for with this setup? We'll clearly be looking for this 1 minute fair value gap. It makes sense. Why would we not try and get an entry up here instead of all the way down here? It just doesn't make sense waiting for the CISD. You guys can clearly see that. We want the best entry. We want the best risk to reward. So bang, we play this out, and what do we see the next candle do? Fat volume candle straight to the downside. No bottom wick, no nothing. We're just straight pushing down. What does that tell us? That tells us, bang, that is our entry. We enter instantly off of that inverse fair value gap. We're putting our stops up here. And then where are we targeting? For me, my exact target on this trade right here is this pre-market low that we had put in down here. You could target more, you could target less. It does not matter. Once again, exactly why I'm targeting this pre-market low, that will be in that risk management plan that I will have in the link description if you need help managing your risk so you can actually capitalize in these markets, because these are very manipulative markets in 2026. And then to make sure we are fully managing our risk and playing this safe, I have my break-even point resting right here. And now it's just as simple as let the trade play out. We're targeting a 2.81, very, very good trade, targeting 145 points. And if we play it out, what can we see happen? Chops, price is moving kind of slow, and bang, it ends up absolutely smacking full TP right here. You can see that as soon as we hit this point right here, our break-even, what happens? Our stops go to break even. It's a risk-free trade, and we are just sitting within profits, and it ends up absolutely smacking. This trade took a little bit longer to play out because you can see it was pretty choppy. 2026, we've had choppy market conditions. That is why this continuation trade is so much better, because even if it's chopping, it's going to chop in the way of the trend. And if we're catching the continuation, we're trading with the trend. And that is exactly why this has been rinsing prop firms in 2026. Once again, when did we get into this trade? We got into this trade at 7:39. So all you had to do was just stay patient for 9 minutes into market open, and you would catch this beautiful continuation trade. You're seeing a trend. This setup in this model is showing itself within 10 to 15 to 20 minutes into market open almost every single day. So if you can stay patient for that, you can capitalize. Because if you get caught up trying to chase this pump that we've been having out of open every day, look at this. You would have got manipulated. You would have got manipulated. You would have got fried. So if you can have just 15 minutes of patience, we will see these trades play out almost every single day. Just to make sure you guys can actually fully understand this, I'm going to go over one more kind of complicated example and really break it down fully for you guys in every single thing that I see on the chart. This example is where it gets tricky. This is why the 2026 markets have been frying traders, because it has been so much manipulation out of market open. And this is going to show you how it can play with you, showing you both of these things. What can we see coming out of market open? We are very bearish, right? Just like that last example I showed you, we're very bearish, and what's left behind right here? We have a 15-minute fair value gap. So let's say price just either pumps out of market open to the upside. We're going to look for either that 5-minute continuation up or that fill of this 15-minute and the continuation down, obviously, right? What I just went over in the last two examples. So if I play this out, what can we see? Right out of open, we get a bang, pump candle to the upside, another candle. What is this? We're manipulating, just ranging, bang, another pump candle up. What are we doing? We're pumping straight to this 15-minute gap, all right? So we've hit this 15-minute gap. What are we seeing? We're seeing a push down, push down. Where is our confluence, right? We're looking for this 1 minute fair value gap to get inverse to the downside, because that is exactly what we're looking for the continuation. So if we keep playing this out, what can we see? We're pushing down, did not inverse this gap, continued, pushed back up. What do we just do now? Remanipulated, tapped in at 15 again. Now we're pushing back down. This looks good, right? This looks good. We still have our 1 minute gap. And what is that aligned with? It's aligned with a CISD level now too. So we continue to play it out. Bang. There's our inverse gap to the downside. So what would we normally do? We'd normally enter. But this right here is wrong. We do not want to take this continuation trade, because why? Because we're stuck on the 1 minute time frame. What do we need to look at? Remember that first example? We get that pump up, and what was created right here? You can see we made a 5-minute fair value gap now. So now, in order for us to look for that continuation to the downside, we'd have to see this 5-minute gap get disrespected to know that we do want to continue down. That's telling us, now that we have a 5-minute gap in the way, we're not looking to enter just off of this 1-minute gap. We need to wait for this 5-minute gap to get inversed. And if we play this out, what can you see happen? You can see we start to continue to push back to the upside. And if we look at the 5-minute chart, what did we do? We respected this 5-minute gap. This now gives us a whole nother look onto this continuation trade, right? Because now, instead of looking out of this 15-minute, where are we looking? We're looking for that continuation of that pump to the upside out of this 5-minute gap. Exactly what the first example was, but now it's trying to manipulate you because the market was trying to get you to enter on this first continuation trade down. But what happens if we can just stay patient? We can see that this push down was what? To fill this 5-minute gap. And what did we do? We literally manipulated all of these lows right here, right? These are two pre-market lows that are relative equal lows. These are equal lows resting down here. So we've done what? We've pulled back to this 5-minute gap, and now we've swept out equal lows. This is screaming continuation out of this 5-minute gap to continue this pump up that we had out of market open. So if I were to bring us back a few minutes, what do we have now? Bang, we're respecting this 5-minute gap, and we just swept out these lows. We're looking for our longs. What are our confluences? Remember, 1-minute inverse fair value gap or a 1-minute CISD. So we have our inverse, not an inverse, we have our fair value gap right here. And where's our CISD? Our CISD is all the way up here. So we're just instantly wiping that out of the picture. And now it's just wait for that 1-minute inverse fair value gap. And you can see the next candle does what? Bang, inverses this gap. So what are we doing? We're entering. This is our exact entry model. This is us looking to catch this continuation, because also what can we see? Just like that first and that second example, we got our pullback, filled this 5-minute fair value gap, and on top of it, we swept equal lows. And what did we get? We got this V-shaped recovery. We got fat volume pushing straight to the upside. You can see, look, no bottom wick, just straight buyers, we're pushing. So we enter, where are my stops going? My stops are going at this low. And then where are we targeting? We are targeting this 15-minute high right here, which is what? Is 6 a.m. for me. That is a pre-market high. And it is also what? It's a high that has been tapped into this 15-minute bearish fair value gap that rejected out of. So this is our exact first take profit where this could reject. We could sweep out the high, fill this 15-minute fair value gap, and then push to the downside. Hey, yo, that is a sus-ass drawing. Sorry about that. And then where is our full take profit? Our full take profit is this London high we have right here. It is a 15-minute high. It's not full London high. London high is all the way up here. But that is way too excessive. We're not trying to take a trade all the way up here just out of an out of market open continuation. We're simply just looking for our next draw on liquidity. And this is our next draw on liquidity resting right there. Also, I do want to show you guys this too. If we look at the equilibrium of this entire range, where's equilibrium resting? It's resting right at that 15-minute high, which is our first take profit. That's why we're taking a first take profit there instead of just holding all the way to this high up here, because we want to catch profits. We don't want to sit there and have to watch this trade run 136 points that we're targeting and let it come back and stop us out at break even. This is exactly how I've been managing my risk in 2026 to be able to rinse these prop firms. And when I'm targeting trades like this where I have a first take profit and a second take profit, I'm usually never placing a BE before my first take profit, because that first take profit is the first point of rejection. So my BE will simply be that first take profit. So we'll be able to hit profit, secure profit, and be able to go risk-free on the trade. So we've done everything right. We stayed away from this fake continuation trade that was trying to trick us, and we stayed patient, saw this continuation out of the 5-minute and the sweep of these equal lows, and now we are in this trade, and it's as simple as just let it play out, see what happens. You can see, bang, we hit first take profit, and bang, we absolutely print to second take profit. So it is as simple as that. Once again, this trade took about 20 minutes, 25 minutes to play out. So this trade was longer. And the reason this trade took long is because why? Because we're in choppy conditions. But that is why the continuation plays out. Just because it's choppy, it doesn't matter. It's going to continue the trend, choppy or not, and it's going to reach our targets. And you'd never guess, when did we enter this trade and when did we see this setup form? At 7:45. So it's just like the other two examples. All you had to do was just stay patient and wait 15 minutes into market open and just stay away from all this manipulation that the market has been having out of open. You stayed patient, didn't fall for this pump, didn't fall for this move down, didn't fall for this move down, just stayed patient for 15 minutes. 15 minutes is nothing. And then we were able to catch this beautiful trade that printed us a 2.32 risk to reward, catching 136 points. This right here, these are the trades that are going to allow you to pass the accounts, to build buffers, to get payouts. It's as simple as just stay patient and wait for the continuation to show itself. It is March now. We are 3 months into 2026, and all year we've had this bad price action right out of market open. And what have I been doing? People have been getting fucked on this, but me and my students, we've simply been just staying patient, waiting at least that 15 minutes to then be able to catch these beautiful continuation trades for the last 3 months. And with these last 3 months of data, I've realized that this shit was absolutely printing, and that's why me and my students were getting payouts and why we were seeing so much success so far in 2026, to where I realized, all right, I need to drop this for you guys. I need to give you the full breakdown, because so many of you guys are just getting fucked up and getting rinsed right out of open because there's so much manipulation. So if you want to be able to stop getting caught up in this manipulation and be able to know exactly when you should be entering these continuations and how to see them every single day, I go way more in depth exactly on how we can catch these with all the tips and tricks and all the good stuff with my one-on-one students, because I will tell you guys right now, I do not give away all my sauce on YouTube. This is not every single thing that we see to find these exact trades. This is just pretty much an overall breakdown. But if you want to learn all the good shit, all the tips and the tricks, all the stuff that is going to help you to find these every single day, you can check out the link in the description below. I will have a link to my complete one-on-one mentorship where I help my students be able to get funded, get paid out, get those consistent payouts, see 5-figure months, and stop blowing accounts over and over again, chasing trades, getting manipulated out of the markets like so many fucking people have in 2026. We're already 3 months in. Stop fucking around. Stop getting caught up at the beginning at market open and start printing with this exact continuation model. And if you can't figure it out on your own, I'm here to help you. I'll give you structure. I will break everything down for you. It just comes down to if you want to make the change and if you are ready. I only accept real serious traders. So if that's not you, don't even bother clicking the link below. But if you are serious and you want to be able to start catching shit like this every day, just check that out. And I guarantee you, you will not regret it. Me and my students have been absolutely fucking printing so far in 2026. So this is the continuation model that has been rinsing the market so far. So please, I hope you guys made it to the end of this video. If you did, I hope you actually learned something. I hope you can maybe implement some of this into your own trading to stop blowing accounts and hopefully see that consistency and see consistent payouts for the rest of the months of the year. We're already 3 months in. We're already almost a quarter into the year. So we got 3/4 more of the year to absolutely let this model print. So please just take action on this model. I hope you liked this video. If you could, it would mean the world to me if you could leave a comment, leave questions, leave what you want to see next, and if you could subscribe, that would mean the absolute world to me, because it will show me that you guys are liking these videos and that you guys will want me to continue to push out more of these actual full breakdown videos of how I'm winning in 2026. So with that, thank you for watching. If you made it all the way to the end, I will catch you boys later, and peace out.